sponsored by the Securities and Exchange Commission of Nigeria.
Hello and welcome to Eye on Nigeria's capital markets. I'm Wale Famrewa. On our program today, we look at the emergence of over-the-counter markets in Nigeria. These markets enable the trade of stocks, bonds, and derivatives on a platform unsupervised by a regulated stock exchange. Over-the-counter markets are thriving. These platforms allow the trade of unconventional securities which don't fit the mold and structure of products typically found on a stock exchange. Regulated bourses like the JSE in South Africa and the NSE in Nigeria typically enforce strict regulations on listed securities, and compliance to these rules can be a significant cost burden to small or growing companies.
After you've listed, you have to submit monthly returns, quarterly returns, make forecasts for the economy. A lot of companies find this very, they just feel that it's an unnecessary stress on their operations. And also, in terms of the market, a lot of companies want to remain private for competitive reasons and just simply for in reality, tax reasons. So a lot of companies will rather that the competition does not have full details of what they're doing and how they're doing it.
And while exchanges are widely seen as the best stage on which to raise capital, not all public companies require this platform.
Typically, companies that have a big parent who is already listed somewhere else, like MTN, might not need, there's really no benefit. There might not be any benefit to them, or they might perceive that there's no benefit to them to list in Nigeria. Companies that have a very good track record, good proven business model, companies that are subsidiaries of very successful companies, companies that are government owned. The truth is that companies that do not list or feel they don't need to list usually have very, very strong backings. But the truth is that we have a market right now where the market is not valuing a lot of companies the way they would rather want to be valued. And the major advantage to a lot of people of the additional burden of listing is that you get a multiple of your current valuation or your earnings. So if the market is not offering you that, then to them it does not make any sense. Well, I think things have changed. The market is beginning to value companies properly.
Over-the-counter markets offer a platform for investors to buy and sell shares of unlisted companies and other securities. It's a concept that has existed in Nigeria for decades, especially in the country's banking sector, where traders buy and sell a wide range of securities.
The interbank OTC market is actually a very, very successful market. You have federal government bonds traded on it, you have state government bonds, you have corporate bonds. Of recent, you have commercial papers. The two major parties in terms of that do the actual back end are CBN in case of treasury bills and FGM bonds, and also the CSCS. And I think it's been extremely successful. You have huge volumes, you have very successful market makers, especially in FGM bonds.
When it comes to the trade of equities, the OTC market for stocks is markedly less structured. And it is this lack of structure which first prompted stockbrokers and the Securities and Exchange Commission to call for the formation of a regulated OTC market almost 30 years ago.
In 1988, the Securities and Exchange Commission Act made provisions for the formation of Association of Securities Dealers to create an over-the-counter market. Basically, that was to ensure that there was transparency and discipline within the over-the-counter market. Having created thousands and thousands and hundreds of thousands of shareholders out of the indigenization exercise of 1972 and 1978. In the 1990s, SEC mooted the idea. A committee was set up. I was part of that committee to look at the facility.
I was privileged when I assumed duty as the Director General of SEC in 1999. When I was told about this particular project, I quickly reorganized them and I assured them of even greater support by the SEC. And the committees were formed in different aspects of the setup. But of course, we had challenges, because as at that time, there were stakeholders who did not believe in the dream. Today, we have the stock exchange, very supportive, and a part owner of the NASD OTC. It didn't used to be like that before.
The brokers didn't embrace it in the numbers that were expected. And over the years, SEC has raised the capital requirements for starting a securities exchange because they classify the over-the-counter market as a securities exchange, which we told them was wrong because we didn't need the capital to really start. During the banking consolidation and the capital market boom that followed, a lot of companies of various descriptions came to the market, promised they were going to list on the exchange, and sold shares to hundreds of thousands, if not millions of people. They are promised to list on the exchange, they have not fulfilled. So there are loads of shareholders out there stuck with securities that they would like to either trade or dispose of or adjust their portfolio or whatever the case may be. They haven't been able to do that. But before that, like I said, there are many people who have bought shares in companies that were indigenized in 1972, 1977 that are currently trading in the market unsupervised, unregulated. So oftentimes they are taken advantage of by insiders as well as anybody who thought he knew anything about shares. The people who are acting as go-between are unregistered people, in spite of the law that only registered brokers can deal in shares. But it goes on and on and on. So for this market, for you to bring confidence into the market, you need to put it on a platform that ensures efficiency, transparency, and of course, it must also protect the investors.
Stockbrokers have been selling some unquoted companies, especially the PLCs like West African Friesland Milk that has been in the market for years, and people have been buying and selling. But brokers as at this time are now very more interested in doing that business. Not many brokers were involved in it because they were not too sure of the pricing, they were not even too sure of the authenticity of the certificates that they were carrying. But with the OTC, it will make brokers find it comfortable to sell those shares and then even find time to bring in other PLCs that were not in the market before. It will give us opportunity to go market them and say, look, you have a different platform that will enable you to transfer your shares so effortlessly, and then you'll be able to make the price the way you want it, and it will be transparent for everybody.
A clear sign of the changing attitudes towards the concept of the OTC market in Nigeria is the participation of the Nigerian Stock Exchange in emerging platforms.
I think the vision for the Nigerian capital market is really to populate all segments of the market with appropriate venues to drive transparency and appropriate price discovery. The NASD market is really trying to address the unlisted issues, those that don't meet the standards of the exchange or those that have chosen not to list for whatever reason. We are in support of the platform, and that's why we've invested in it. We have a seat on the board, and we're also supplying them with our technology to drive a successful takeoff of the platform. I should also say that on the other end of the spectrum, you have the OTC market for fixed income, interest rates, and other things. And we're also an investor there, FMDQ, which is going to be launched very soon. We're also working, we're also a member of that board, and we're working very diligently to make sure that that market takes off successfully.
The stock market crash that began in 2008 left a trail of disgruntled investors that bought shares in unlisted companies. Unhappy investors are unlikely to buy shares again, and this means that capital formation to drive the growth of the broader economy could be stifled until investors find avenues to trade the shares they hold.
You now have a situation where your local market, the people who really need the money, the people who don't have some parent backing them, the people who will grow the economy, who will provide employment, cannot get financing to expand. And the best way, I won't say the cheapest, but the best way to expand is to get equity, patient money that can grow with you through thick and thin. Right now, the only option you leave companies who wish to expand is debt, and debt has its issues. And the debt is not even available right now because of the crisis that the financing sector it's just coming from. So you have a problem where the companies cannot expand, they cannot produce employment. Therefore, the Nigerian economy will not be able to expand the way it should be able to.
The secondary market provides the assurance that drives people to buy securities in the primary market. So if you don't have a secondary market, your primary market will be very shallow. For us, we need to mobilize capital to grow this economy. And therefore, every source by which you can raise money must be made efficient. You cannot make the primary market efficient without an efficient secondary market.
This is history making. The reason it's history making is that we have an aspiration for our market to realize its potential, be the same size as South Africa or Brazil, which is a $1 trillion mark. And today we're at about $100 billion if you combine equities and fixed income. What this platform provides is a platform for unlisted securities to trade, and potentially when they see the benefits, they'll consider listing. It also provides opportunities for broad participation by investors because it's web-based, in addition to, of course, leveraging the same trading platform that the Nigerian Stock Exchange will leverage. So in terms of expanding the scope of the capital markets, it's amazing.
I think in the past, it wasn't very clear that if it is not on the Nigerian Stock Exchange, it is unregulated. It wasn't very clear. Now it's very clear. If it is not trading through a market, it is not regulated. I think a lot of people will become more aware, and we're working on building the awareness that any deal must go through a regulated market. If it does not, or if it does not approach and is not accepted on a regulated market, then really you should be careful about investing in it. This is a very big investor beware market, and so we send that out there as well to let people know that only invest in things that you can trust, only invest in things that have been endorsed either by the Securities and Exchange Commission or by any of the exchanges.
Launched this July, the NASD is a web-based bulletin board but borrows the basic infrastructure for depositing shares and settling trades used by the NSE.
It's a lightweight market with a light footprint, but it uses quite a few of the existing structures that we have on the secondary market that we have right now. So we still are using the CSCS. We are using some banks, the settlement banks. We have registrars who will be working with us on verifying certificates. And we have brokers who are really the interface between the clients and between the investors and the market.
The emergence of the OTC market in Nigeria is also designed to address issues such as governance and transparency in unlisted public companies.
I believe it's also very critical for enhancing transparency and corporate governance, because today we have a number of public companies that are not listed, and there is some trading that happens of the stock of those companies. What NASD provides is a platform that is regulated for those companies to trade their stock. How does this work? The way it works is, of course, first of all, NASD is a registered platform. The participants are all registered, whether it be the brokers that participate on it or the NASD platform, the SRO providers. It's a market that will be guided by rules. Those rules have currently been submitted to the SEC, and SEC will approve them. NASD, as a regulated platform, will make returns and report periodically, quarterly at least, to the SEC. We will inspect the platform. You will be able, as a participant on the platform, make a complaint or give us feedback.
After the break, we learn more about what to expect from the emerging OTC platforms in Nigeria's capital market, as well as the key challenges that remain.